Picture this. You're holding a single sheet of paper, literally just a few pages of text. It isn't money. It's not a stock. Yet, with this exact piece of paper, governments actually build entirely new nations. Corporations raise billions upon billions through it, and investors across the entire globe furiously compete just to own it.
Okay, let's dive into this, because we really need to ask a question that, honestly, most people never stop to ask. What exactly is a bond? Is it simply a loan, a promise, a contract, or is it something far more powerful? You know, as we look through bank vaults, chaotic trading floors, government treasuries, and these glowing global capital networks, one astonishing truth really starts to emerge. Hidden behind every single bridge, airport, hospital, megatech company, and national economy is the exact same financial invention, quietly moving trillions of dollars every single day. By the end of this explainer, you're going to realize something pretty profound. A bond isn't just another investment. It is quite literally one of the most important contracts ever created. It is the invisible foundation of modern finance.
Now, before we pull back the curtain and really get into how this system works, please note, this explainer on the channel Blocks, Bonds, Funds is created for educational and informational purposes only and does not constitute financial or investment advice. All right, so beneath the visible financial world we all see, there is this massive hidden network of contracts linking governments, corporations, and everyday investors. From Washington and London all the way to New York and Mumbai, flowing capital literally connects the globe. And right at the heart of this network, that's the bond. Fundamentally, a bond is a legally enforceable debt security. An issuer, so the borrower, owes the holder a debt, and they are legally obliged to pay interest on it and eventually repay the initial principal amount. It's an unbelievably powerful tool that takes future wealth and converts it into today's growth. Whether it's your local government building a new high school or a global tech giant constructing a data center, they are using this exact same tool.
Now, what's really interesting about this slide is that when you look closely at the anatomy of a bond, these individual components actually assemble into a living, breathing financial system. You basically have four main parts here. First, the principal, or face value. That's the raw amount being borrowed. Second, the maturity date, the hard deadline when that principal must be paid back in full. Third, the coupon, which is the fixed or floating interest rate paid out regularly to the holder. And finally, the yield to maturity, the total annual return an investor can actually expect if they hold on to it until the very end, factoring in the price they initially paid. Look, these aren't just dry financial terms. They are fully transferable legal claims.
Let's hit rewind for a second, because this whole system didn't just magically appear on Wall Street. It traces back from ancient debt records and Roman obligations, all the way to 1694. That's when the Bank of England borrowed £1.2 million to fund a war, marking the real inception of a permanent national public debt. Fast forward to 1751, and they issued British consols. These were perpetual bonds that literally had gilded edges. That's actually why UK bonds are still called gilts today. The US followed suit with its own consols in 1877. And today, we have massive, highly complex markets for modern UK gilts and Indian G-Secs. This history proves how lending totally transformed from a localized, private handshake agreement into something incredibly standardized and globally tradable. Truly one of history's greatest innovations. To really grasp the power of this, we need to break a few common misconceptions. Like, why do massive companies and governments issue bonds instead of just walking into a bank for a loan? Well, think about the constraints. A traditional bank loan is generally non-tradable. The borrower is stuck with a single lending institution, usually for a pretty short term. But a bond is pure freedom. It's fully tradable. It attracts a broad, global base of institutional and retail investors, which massively improves pricing and liquidity. And it can span decades, which perfectly matches the timeline of, say, building a multi-billion-dollar infrastructure project.
And while we're at it, we absolutely have to break the illusion that bonds and stocks are similar just because they're both securities. When you buy a stock, sure, you become an owner with an equity stake, but your timeline is indefinite. And if that company goes bankrupt, no way around it, you are dead last in line to get paid. But when you buy a bond, you are a creditor. You have absolute legally binding priority in bankruptcy over stockholders. You have a strictly defined term, your returns are backed by an enforceable legal right, not just crossing your fingers and hoping for corporate profitability.
And that brings us to the core of it all. The absolute strength of a bond lies entirely in its enforceability. Enter the indenture. Also known as a trust deed, this is the master legal document between a bond issuer and a trustee, basically an independent entity appointed to act on behalf of all the bondholders. It explicitly maps out every single feature of the bond, every right of the investors, and every strict duty of the issuer. It's the legal architecture, the prospectuses and indentures, that transform a mere promise into a highly secure digital agreement heavily protected by global regulators and courts.
I mean, we're talking ironclad here. These are complex covenants. Affirmative covenants explicitly tell issuers what they legally must do. Negative covenants tell them what they are strictly prohibited from doing. And then there are things like cross-default clauses. This is a fascinating one. It means if a borrower defaults on one specific loan, it automatically triggers a default on their other loans. It essentially guarantees equal treatment and protection for all global creditors. And when you're dealing with sovereign nations, you'll often see waivers of sovereign immunity, meaning even entire countries agree to be held accountable in commercial courts if things go south.
And this brilliantly illustrates how all those legal promises build into an active, living market. Capital circulates continuously between issuers and investors across the entire global ecosystem. You can see the traditional bond lifecycle right here. It starts with the rating and prospectus creation, moves right into the book building and distribution phase, and then hits clearing, settlement, and secondary market trading. The beauty of this is that the capital circulates continuously, without ever once interrupting the actual day-to-day financing of the underlying corporate or government activities.
If we walk through the glowing pathways of this bond life cycle, it really breaks down into 5 main steps. First up, issuance and subscription. That's where the capital is officially raised. Second is settlement, where the legal transfer of funds and securities happens completely seamlessly through global exchanges, custodians, and clearing systems. Third, you get that regular heartbeat-like rhythm of coupon payments. Fourth is secondary trading. This is where bonds change hands among pension funds, banks, and everyday individuals. Prices will move up and down based on interest rates, but that massive liquidity allows ownership to transfer instantly. And finally, number 5, redemption, when that original principal is fully returned at maturity.
So, pulling the camera back to view this whole system at scale, you start to see a massive global ecosystem coming alive. Who is actually issuing all these bonds? It's a vast, diverse network. You've got sovereign governments issuing treasuries or gilts to manage their national debt, non-sovereign local entities like your city municipalities funding local schools or highways, corporate issuers ranging from massive tech titans to industrial giants looking for growth capital, and supranational organizations like the World Bank. They all connect into one giant seamless network, taking global savings, maybe even your own retirement pension fund, and directing it precisely toward global investment.
To truly grasp the macroscopic, frankly mind-bending scale of this market, just look at the staggering number, 14 billion British pounds. To put that into perspective, that is roughly the GDP of an entire small country, raised in a single record-breaking 10-year UK gilt sale. And get this, it drew over 141 billion pounds in investor orders. Literally trillions of dollars flow through US Treasuries, Indian G-Secs, and European debt markets every single year. The sheer planetary scale of capital flowing through these exact same contractual instruments is almost beyond comprehension.
So the crucial point here is the real-world impact. Bonds are quite literally the reason the modern world gets built. U.S. Treasuries and Indian G-Secs finance critical national infrastructure, defense, and vital public services. Meanwhile, corporate titans like Apple, Microsoft, Reliance, and Tata issue bonds to optimize their massive capital structures. And what's incredibly ironic and a bit funny when you think about it is that companies with mountains of cash reserves like Apple still issue bonds. Why? Because it's simply more efficient for them to borrow your money to build new factories and fund massive R&D. Whether it's a government funding a new national highway network or a tech giant expanding its global data centers, they both rely on this exact same contractual architecture.
As these luminous financial networks wrap around the earth, financing literally everything from local healthcare to global tech innovation, one truth becomes absolutely undeniable. Every concept we've explored today assembles into one staggering global architecture. A bond is so much more than just a line item on a balance sheet or some yield percentage flashing on a screen. It is humanity's contractual foundation for modern civilization. So, the next time you see a massive suspension bridge being built, a new airport terminal expanding, or a towering city skyline growing, just remember the invisible contract making it all possible. It really makes you wonder, what incredible future will bonds build next?